So those are kind of the only opportunities in terms of the indices. As for other assets, such as gold, maybe we'll just go full screen. Gold is obviously in a higher time frame consolidation. So, just kind of all these highs here. And obviously you see we have these lows. I'm at a preference of trading towards these lows. And that is specifically because if we are going to hold this range, so essentially this range low to this range high, there's kind of two options here for me. If we're going to, I'll draw it on the side, hold this low, right? Hold this range and trade it higher, right? We need to hold some structure in this range. So taking a look at that, where's that structure? We have a fair value gap here, right? So when we form this low in here, I'm like, okay, we can possibly trade it higher, right? Next day is a potential long. That doesn't close well. Sweep the previous day high. Now we're forming a protected swing lower, right? So that's telling me, okay, we're not going to react out of this fair value gap, whereas the next area we can react. 0.5 of this little CISD here that sweeps out previous lows, right there. So looking at that, this is a potential area and kind of the last area where I could say, hey, we can form a low in here and trade that higher, right? So that's kind of my whole idea is if we get a low put in here, can trade it to there, right, back up into the range, and if we get continuation through that to the highs, right? Obviously, this is not really the reaction you want to see out of a point of interest if we're going to form a low, right? So with that occurring, it's telling me what we had expansion met with expansion here, forming a reversal, retracement, expansion. I'm viewing this as a retracement to expand again to these lows. So my idea on gold is to trade it lower, right? And technically it swept out here, so there's a potential short in here. We can talk about that. It's just not super ideal in terms of its structure, right? Very shallow sweep, but mainly what you're trading off of is it comes back up, retests that area, closes below here. So you're assuming if we're going to trade it lower, this high should remain. And then it's a bit difficult to try to trade this into here, right? Because it's not clean. Once we close below, sure, you could try to find an entry in here. It's a bit difficult. I'm not trying to short this right after we are at the lows. Really the only idea you could potentially get out of this is this is actually a protected high, right? So if I'm assuming this is going to hold to trade towards this low, right? I'm not trying to short right after this because look, we're at the lows. We're taking out those lows, right? I'm not trying to short that here. So I need a retracement. So can use 0.5 of that as a wick, 0.5 of the wick as a point of interest. We retrace up into there. We have an hourly candle through closure, or you can use the 30-minute in there. I prefer the higher time frames. Also see what the 4-hour looks like. Pointing down, that's fine. So you could go to the 5-minute and see if you can get an entry in there, this continuation. So essentially how you would approach that is there's a change in the state of delivery. We retrace back up into that, right? Balancing everything out, continuation lower. So you'd have to frame something like that, right? You get to our, yeah. Right? Now I prefer to be able to get to our at the lows, right? So could I adjust it to get that? Potentially. But yeah, that's kind of the whole idea on gold. There isn't really much you could try to get into there like that. Specifically, nice V shape. We're leaving the lows. So expansion, retracement, continuation. So ideally for gold here, I would still like to see a continuation towards this. Right? If we go back out to the daily, back towards this level, and kind of two areas we can mark out that and that. Don't really care too much about that. Go back out here on the 5-minute. That's kind of the two areas I'd watch. So, any questions on gold? Let's see. Do you think the market's been harder? Do you use SMT in your strategy? Yeah, I do use SMT. It's more of a confluence though. I see a big problem where people try to use SMT and then turn it into something. right? So you don't just take SMT and be like, okay, now it's bullish, because it'd be like this, saying, oh, we have SMT here, now it's bullish, when my idea is not bullish, right? Sure, you can make a case for that, saying we have all these failure swings out here. If we make a V-shaped reversal, CISD, sure, we could go run those out. But my whole idea is bearish gold, right? So that doesn't make sense to do. Do we take this hourly close as a new CISD on gold? So yes, you could, but also I'm not wanting to trade it really at this low, right? Because we're below lows, right? If we get a new CISD, I would prefer price to close, form a new swing to trade off of, right? Because right now, where's our protected high? Up here. The price could do whatever it wants in here and still be valid, right? I'm not trying to position myself at the low, essentially. That makes sense. And a little something here we can talk about. We'll just do it on the 5-minute here. Clean up everything. We don't need to see it all. Oh, we started a new candle. That's why we're getting the little move up. Did we close real quick? Yeah, we did. So if this current trend is going to continue, it would leave this high. But we'll do something like this really quick. I just want to talk about some terms and technicalities, right? When price switches from bullish to bearish, that's what the change in the state of delivery is, right? So that's when it's changing the state of delivery from bullish to bearish, right? All of these following are not changing the state of delivery, right? Because it's already bearish. It's not changing anything. These are just opposing candles. That makes sense? Now, when I say intra-candle change in the state of delivery, why is that one? Well, inside that candle, right? If we're looking at it, we'll just draw it. I'm basically saying we have the change in the state of delivery right there. So it's bullish. I'm saying within this candle, when it opens and trades lower first, that's bearish. And then it changes that state to align with the higher time frame one. But little technicalities on there, because it does confuse me sometimes when people are saying the change in the state of delivery, and I'm like looking here, and there's somewhere over here. I was reading your post. It said you'll not take trades pre 9:30. Who said that? Andrew said that. I don't say that. I will trade before 9:30. 7:55. This is not a change in the state of delivery. That's just a continuation. That's an opposing candles. Because look at this. Ready? Bearish. This shifts it to, or bullish. This shifts it to bearish, right? So right here, I'm not shifting anything, right? We're already bearish. It's just a continuation. It's an opposing candle. For today, because tomorrow markets close, is it better to use 4-hour 15? I don't think it really matters too much, like by day, what time frame you use. It's just what looks the best most of the time. I was long yesterday pre 9:30 on NQ because I assumed the low day was in 9:30, swept me out. We can go take a look at that. That's something I'm not going to trade because I'm not trying to trade those reversal days on a bearish week. So, here. Also, my indices idea, we'll go talk to it as we get closer. I'm basically explaining that I don't really have a bias here. I'm expecting more of a consolidation, so I'm looking, basically my idea is looking back into here. And the whole reason for that is if you zoom out on excuse me, on the hourly here, right? We're just kind of in a consolidation. We've taken out the low in a consolidation. We've taken out this high in this little consolidation. So if we're doing that and we're just going to continue to consolidate, I need to go get some water. Then I'm just looking back into seeing price go trade back into this range. So that's that. Let's go back to NQ. You said 9:30 yesterday. Right. So for me, we'll go here before 9:30. For me, right, if I go to the daily, take a look at this. You can, I talked to someone, there's a possibility you can frame this bullish using 0.5 of the wick, right? Sure. Personally, that's not the trades I generally look for, but in your case, you're looking to frame that. So we can say, okay, we're assuming this is a reversal day, because the only reason to trade this, like that is assuming this low should hold, considering a reversal. If it's not a reversal, then we target previous day low. And that would be too large of a wick to trade that, right? So you just wait for the next day. But assuming that, go into the 4 hour or, 4 hour, that's going to give it away. Don't do that right here. So you're assuming from the open to now, you're assuming that the low day has been put in. So let's talk about this. If I just zoom out a little, right, to me, this isn't really V-shaped. It's just a large move down and a retracement, right? If you zoom in, you can make a case for that, but let's talk about it. I knew a few people used this as the change in the state delivery, which mechanically, yes, it can be used. But for me, it's just, this is the whole move down here, right? It's, if you look at the difference between when we have something like that, right? And using that versus something like this, right? That's more experience based, I would say. But like if I go up one time frame, that just doesn't exist, most likely. You see what I mean? And it's a bit more clear. So there's that. The next thing you can notice is we've already taken out previous day low. Can we come and close back above it? Yeah, we did. Sure. So that kind of meets the requirements as coming back, closing inside that range here. Now for this, I'm not trying to trade this reversal. I'm going to look for this continuation. Right, so that's usually when I'm going to be looking, can we close over this area? Right. You drop down a bit lower, right, and refine it. But especially kind of the volatility here, it's not very high, right? You can see that within the candles. I'd prefer a higher time frame closure. And then let's see if we get that. We don't, right? That's kind of how I'm going to always approach this. I also just, that's why if you are in my course, I never talk about reversal days, right? Because think about this. If you're just looking at this now, you're like, oh, why did I even think it was bullish, right? It's just easier to trade continuations than try to pick the reversal. Hopefully that makes sense. So as for like refining that down, how could you have done it? I mean, I can't say this is a bullish candle two closure. I mean, it's a candle two closure both ways. Let's go take a look here. Go to the 5 minute and even frame it. Okay. All right, we're on the 5 minute. Let's see if we can frame it. Do we have a CISD? 5? No, because we need to close over this level. We go close over that level. Okay. Oh, I guess it's using that. I would not personally be using. But for me, it has not closed over this level. We're already through candle 3. If you follow the flow chart, it's just not a model, it's a consolidation. Right? So for me, it's just the lack of strong daily bias. Like if price looks like this and you have a super strong daily bias, sure, right? You can be more aggressive with entries. When you're lacking that strong daily bias, you got to be a bit more conservative. You took the 30 minute, let's see. Took the 30 minute C2 around 920. I mean, here's what I don't like about this. I'm just gonna clean it up. So I'm assuming you saw this, right? We have a point of interest, sweep and closure, and then we sweep out and we have a new closure. So you're assuming you can trade this next candle higher. Sure. What do I notice, right? Well, I'm focused on those protected swings. Close over, sure, that should be protected. We fail to close over once. We go lower, we fail to close over twice. Now I'm just viewing this more as a range, right? So for me, that throws me off. As for the lower time frame structure, let's see what it looks like. Or we'll leave that level because that's an important level. That's it's a bit messy. I mean, the thing is like, I don't even consider this a continuation really, because it's just a new reversal, right? So sweeping out this new reversal. So then I would need in this next candle, continuation over this and that next level. I didn't get that, right? You would have needed that close over there to trade it higher. And then now at this point, this is almost just a new reversal. So to trade it, I would just need another continuation. Yeah. Does that kind of make sense? I'm assuming you took an entry just 920. See, that doesn't really make that much sense to me. Let's talk about it. You're entering in here. You notice we've already swept out our previous high here, here, and here. But the main thing is, are we respecting the EQ of this previous candle? No, right? We're trading quite a bit lower. Expansion, maybe if we get an expansion back up, then what? Look for another continuation, right? So for me, it's just always looking for those continuations just keeps me out of trading something like this. I mean, if you're just trading the reversal, I just don't really trade reversals. And that's because of these scenarios. So, all right, let's see real quick. We're going to draw one level on NQ. And let's see if price goes to it. Oh, that's too easy. Feel. So it's like that. Kind of where I'd want to see NQ go to. Just because it's consolidation, sweeping the highs. So I want to see that. Even if we're going to trade it higher, there's no way for me to trade it higher unless we make a low. And there's no really reason to want to trade it higher. So it's like the only thing I could see is that. Let's go back to questions. Also, let me go back to questions at the very beginning. People posted prior to me starting. Oh, wow, there's quite a few. All right. Can we get some examples of right and wrong ICCISD? I have trouble identifying the ICCISD formed with an opposing candle that spans from the end of C2 into C3. So I think you're overthinking it a bit. I do. Come down. So all the ICCISD is here we have candle 1, candle 2. Here we do that. So we have a candle 2 closure. We're closing back inside candle 1. We have that change in the state of delivery there. All it is it's all I did when I created the intra-candle change in the state of delivery, like coined that concept, is I'm trying to mechanically get you to find the logic of letting the wick form in this candle 3, right? Because ideally price opens, lows, trades high, right? So forming a candle, right? All I'm trying to do is say, hey, let this wick form. So when you think about that logic, right? Right here, if we go in, do I trust that this low is going to hold? No. So then I want to see this price open, trade lower, get a new change in the state of delivery or opposing candle formation here, because then I can trust this low, right? So that's an example of an intra-candle change in state of delivery there. Now let's do another example where price looks like this, right? And we're opening up here. And we'll say there's no other fair value gaps or anything below. It looks like that. I'm opening up candle 3 here. We already have that continuation. Do I want to see price go sweep out the low and then go? No, because at this point, if we go down here and sweep out the low, what are we doing? Consolidating. So by the time we come over here and close, and you're looking to take that continuation entry, it's a consolidation. We're taking the high. We go back lower, right? So in this case, this is where I could say, we have a protected swing prior to the open of candle 3. This is where I could take an entry because my continuation has already formed. Or we can form a new continuation off of that, right? But many times this just goes, right? So I would say don't overthink it. It's really just the continuation. In this case, you might say, hey, well, we haven't let the wick form. Well, ideally, if price is going to respect the EQ and the structure, it can form its wick in here and go higher, right? So something like this, no wick. Oops. It could have a very small wick into there, sure. Or if it goes and makes this wick all the way down here, it's just a reversal candle because it's made too large of a wick. I'm just going to wait until, essentially, this next candle, and then if we have a continuation in here, trade it, right? So it's really just the logic of protected swings and when they occur. Don't get too caught up in saying, this has to be right at the open of candle 3. Is that the most ideal? Yes. Does it have to be like that? No. I wanted to know if you are able to use relevant swings as a point of interest on the 4 hour, 1 hour, and 30. Yeah, so the point of interest I use for candle closures are highs, lows, and fair value gaps. So that does work. I've noticed the bias with candle closures tends to lose accuracy when you're in a consolidation. Yes. So I've talked about this a few times. If we are expecting already expansion, we don't need this to be in the line, so we're just going to clear. If we're seeing some sort of expansion and then retracement, right? If this is going to get a continuation, it's going to go and close over this and then go. If price fails to close over this, that's a consolidation. Then you just mark out the highs and lows. That's the easiest way to recognize it in terms of like a trend. So for instance, let's see if we can go find one here where price just fails to form a continuation and then it consolidates. Kind of like this, right? This is an example of what I mean. It's not super clean, but just stay with me here, right? All right, we have expansion. Now with expansion, I can consider this a reversal to trade lower. We have a fair value gap here. We see price retrace into this. So if price goes and closes below this, I expect what? This to remain and that to trade lower. We watch, what do we get? Oh, price fails to close below. Price fails to close below. At this point now, it's just a consolidation, right? Now we take out the high. Now we have a new series of candles. Does it go and close below? It does. This one fails, right? So that's an example of a failed one. But that's essentially the sequence I look for in terms of consolidations. Because retracements shouldn't spend that long, right? And now at this point, it's just a big consolidation. Right, now we're just stuck inside this range. Take the high of this range. Ideally, we trip to the low in the range. I don't know what happens. Yeah, there we go. Right. Now let's go back here to this. That was for you, Maverick. Alpha 6. I failed to differentiate between swing and failure swing. Yeah, so a swing is just a candle with a high or low on each side. We go right here. We'll just look at this, for example. Here's a high with a lower high on each side. A swing low has a low with a higher low on each side. All a failure swing is we form a low, then low next to it fails to run out that low, right? It failures. It's a failure swing. It fails to run out that low next to it, right? That's a failure swing. That's all it is. So for instance, we take a look at, let's find a decent example. Here we go. We have a swing high here, right? This high comes up, fails to run this out. That is a failure swing in relation to this one. If it looked like this, that is not a failure swing. It swept that out. High resistance liquidity. These are failure swings because what? This is a high that fails out. This is a high that fails to run out the one to the left of it. Failure swings. Right? Makes sense? Hopefully. And 1 second. I'm going to switch my mouse over to my PC. I've been using that to read chat. So this way, right, we're coming back. And if we go back to gold, what we were talking about, if price takes out this high, this current trend is over, right? So this bearish trend here is ended. That's all. All right, let's see. What time do you stop looking for trades at? Normally not after 11 for me. Are there any news events you don't trade? I rarely even trade NFP these days. Really just if there's FOMC, almost never. CPI can, NFP can, but I really just don't mess with those three. And then other than that, I just do. How can you tell between the candle 3 being a candle 2 closure or a candle 3? So this is the difference between pattern trading the model and not pattern trading the model. So let's take a look at it. If you have something like this, right? So the question is, how can you know if this candle here is a candle 2 closure because it sweeps and fails to close out, or a candle 2 closure or a candle 3 closure because it closes over the body? The question is, what are you actually looking for? If you're just going to sit here and pattern trade it, you could say both, right? But if we look, what we have an uptrend, right? So I'm probably bullish, so I don't really care about this. Sure, I take a look and say, oh, it's a weak closure. Maybe I need more confirmation to enter into here. But I'm focused on the closure through here being bullish, right? The next thing to look at is you don't just independently look at the closure here and say that's bearish. Look at the candle, right? Open, low, high, there, right? If we go into this candle, there's not going to be a change in the state of delivery in there. And then it just looks like this, right? On the lower time frames, so it looks like this. If we mark it all out, I'll mark out all of the structure here on the lower time frames. Probably looks something like this, right? I just drew these on the lower time frames. So we'll see. I don't know if the change in state of delivery was lower in here, but it looks like it was up in here. So kind of looks something like this. And this is an example of probably right in here where you have the opposing candle formation prior to the CIC. I have no idea what the lower time frame specifically looks like or where this is or what date. We could, if someone can find it, we can go back and look. But really, right, if I take a look at this candle here, right, and the structure, it's not bearish, right? There's no change in the state of delivery. It's just a continuation higher. So just don't pattern trade it. You have to kind of, if you need to look in a little lower, sure, but more so just the logic of what you're actually looking for, right? And you also look, is this even valid for a bearish? No, it's leaving this failure, this swing, right? So one's failure swings, right? So it needs to get taken out first. The second is here we have a point of interest on this side. So at least expect the next candle to go take out this high if it's going to go lower. All right. The white box be considered a point of interest? We're looking for a sell. Go take a look. Nice gold. Zero idea what's going on there. And genuinely don't care. Because for me, there's nothing to trade in here. All right, NASDAQ. I think they're on NASDAQ 1 hour. Maybe they were back testing. NASDAQ 1. If you do reference photos, if you can give a date or something with it, it's very helpful, but we'll just go off the actual image here. Oh. Then we got like 5 minutes to talk about this and we can watch the open. Yes, you can consider, so bearish structure. If we look at this previous day, open, high, assuming these are on 1800, I don't know. Open, high, low, close. We want to watch 0.5 of this previous day. Trades a bit higher, right? Fine, takes out this low. So yes, this is considered a candle 2 closure bullish, right? We have a low, we have a change in the state of delivery, which is closure there. But let's take a look at this. What do we want to see on a low? We want to see price open, make a low, right? We have a nice reversal, right? We want to see that reversal structure, basically a V shape, right? Very similar to what you see here. See how we have aggressive up, aggressive down, right? A nice V shape. Do we have a V shape in here? No, this is just consolidation, right? This is what I was talking about. When we take the high in this consolidation, yes, this makes sense to be looking for a sell because the downtrend, we take out a consolidation high paired with a fair value gap, closure there, we could go back up and then go, right? Which actually, wait, I think I remember this now. In Q 1 hour. Here it is. We can talk about it on my screen. Right? Is this technically a candle 2 closure? Yes, because price sweeps and closes back in. But let's take a look. Right there. Is this a bullish candle? No. And also, how did it form? Open, high, low, close, right? More bearish. This is just a consolidation, right? Because it just can't form a continuation, right? So then once we take out the high, right? That's where, yes, it's mechanically bullish, but I'm not looking bullish. This is just a consolidation, high and low. So then you can say, okay, price opened, took out a high, change in the state of delivery, right? And then can get this can move lower, right? So yeah, very valid to be looking for a sell there. Okay, let's see. Oh, funny enough, he did say, I just didn't read to the bottom. The chart's the 1 hour on August 18th. Cool. All right, let me go back now. But yeah, let's actually go talk because we talked about gold on the hourly there. That's what I was meaning with the hourly close. Is like, yes, you could consider this new opposing candles because you're not expecting this high to get taken, so that high should remain. At this point, you'd need a swing to form here to trade that lower. I'm not really interested. Why? Ideally, where should you be shorting in this day? Around the opening price or midway through, not below previous day low, right? A little less than that. Okay, let's see. What am I missing? Gold shorts. Yeah, you talked about that last night at dinner. I was asleep. 755 in gold. Is it a wrong CSC? No, we talked about that. I've gone through all your content in markets lens. I've also back tested it and developed a model for commodities and currencies. Here's what I'm currently doing. After 8:30, well, we're gonna watch open really quick, and then we will go through your model. All right, let's take a look really quick here. I had the wrong command. All right, so like I said, there's kind of two things that I think happens here. We'll talk about what I think is more preferred for open. We got 3 minutes. Yes, I would be favoring longs towards previous day high because of how it swept this previous day low. Not a huge fan of it not taking out this, but it's fine. We do have SMT with YM, so that's more of a preference if you're looking long, which means NQ is the weakest. ES, we have NQ there, nice. ES is stronger, NQ is the weakest, right? So if I was looking to short something, I would be focused on the fact that NQ couldn't close above this level, right? And then it would go back lower, right? So that's kind of my area of support. As for moving higher, it's kind of already gone, but that would be on YM, right? Because YM is the strongest. So looking for YM we'll just draw it out, right? To in that area, right? So another way you could potentially look at this is once YM takes out this, right? If it does take it out at previous highs, because it's getting displacement through its previous day high. So then you just assume it hits these failure swings ahead. If it's going to expand into the high and get some sort of retracement or reversal, then the weakest asset would be in Q, could then get a retracement back lower, right? So we'll watch it. We have a minute left. But generally it's like that's the area that's going to be support if we're going to see a retracement lower. I really don't have much of a bias today. It's just lacking any higher time frame bias for me. So yeah, it's technically bullish on the 4 hour 15, right? It's just, this is a consolidation. So like I said, unless we sweep a low in a consolidation, it's really hard for me to trade that. YM, you can make a case. ES and NQ, can't really make a case, I guess. SMT on the low. But not much there. So we'll see what happens, but just get this, see, YM pumps. We'll see when it takes this high. We'll do 3. YM here, and Q here, ES there. Right. YM 15. This would be the one you would want to actually trade if you were trying to long this. It makes no sense to try to long NQ as it's the weakest asset, right? So we'll see what happens. Most likely it makes more sense if trying to trade a retracement NQ back into here, but that's usually ideal once we hit this high. right? So we hit this high on YM. If YM is going to get a retracement or a reversal here, that gives way for NQ here to fall back into the range, right? So you see how once it hit this high, that's when NQ starts to fall. So we can go take a look at this, right? So hopefully that makes sense. A bit real time, it was a bit quick. But any questions on that? Because that's kind of the area we wanted to see. The area I marked out before I removed everything was there. So there we go. All right. Paired with SMT on the high, it was very quick, right? But mainly because YM takes out this high. So that is all I would be expecting from NQ though. It's not like I'm saying, oh, it's a short. It's giving more data to go here. No, I'm literally just saying that NQ should reach into this area, right? Which, we can go to a 1 minute, some sort of time frame. That's all I want. That's it. Now I don't know what's going on. Make sense? Price could do whatever, and I wouldn't surprise me because I don't know what's going on now. The only idea I had for the open was YM to take this high, which it's going much higher. But once it takes that high, it sets up this little short for NQ. And that's depending on if you are bearish, right? You probably favor this type of setup. If you're bullish, you favor YM, right? Obviously YM's cleaner. It's just taking some Viagra or something. And it makes no sense to focus on ES here, right? Because you are bullish, why wouldn't you focus on the one that's absolutely going on a tear? If you are bearish, why not focus on the one that is weaker? Why focus on ES here? And you notice, what does it do on the open? This, right? Cool. All right, that's kind of it there. I mean, there's no, like, sure if you're scalping or on the lower time frames or very bullish on YM. You could make a trade out of this. A bit more difficult to get a trade out of this on NQ unless you're in the lower time frames, right? But that's it. Do I not care about at all about NQ reaching into this hourly city? I mean, it did, right? So this is where it could form a low and trade higher. Sissy, Sibby. I don't know. Bearish fair value gap, bullish. I don't see a bullish or bearish fair value gap here. All I saw is we took out the high. Wanted to see us go back into this range. We went back into this range. Can we go higher from here? Sure. Not as big of a fan because YM's already over a previous day high. Sure, it could go for that high, but more than likely, if we're not going to do much today, right, we just kind of react off this wick, sweep the previous day high into the wick, come back into the range. Right? I don't really have a preference. I guess the daily looks pretty decent for those highs, but. All right, let me get back to questions. All right, I've gone through the content market lens. After 8:30, start looking for daily candle closures to form my bias. So the problem I see with this is after 8:30, you start looking for daily candle closures. You should know what the daily candle closure is the day before when the daily candle closes. Oh, that is one. Then I look for an opposite side stop hunt. So yeah, if you're on a middle time frame, something like the hourly, you didn't say that, but reach into a fair value gap or sweeping out a low, if bullish. Once I see a market structure shift on the M5, I take my entry. I mean, that's similar to my model. I want to see a change in the state delivery. I'm going to go grab a water really quick. All right. For indices, same approach after 9:30. I mean, it's very close to my model. I can't really give my experience on that model because I've never traded that. I just trade my own model. Regarding New York reversal, which time frame do you prefer to monitor? I mean, it's either 8:30 or 9:30 should form the low in New York reversal. 2 videos left in the course. I can tell you it's the most best, simply enlightening course ever. Awesome. Did I already walk through GC? Yeah, I did. It's bearish, what I've talked about, but I'm not a fan of after previous day low taken here, aggressive down. I'm not trying to short these lows below the lows, right? It's the same reason why I was talking to someone this morning about why try to long NQ here above these highs, especially if it's the weaker of the 2 assets or 3 assets, right? Why don't you frame long NQ? Because we're in deep discount. See, I guess that leads into what I was just talking about. I'm not viewing it as, oh, this is my whole idea is trading expansions, right? So I don't like to say, hey, we're in a deep discount because this is the weakest asset. This is where I can buy it. I'm not like that. I'm just going to say, yo, YM is the strongest. Why don't I just buy the one that's going on a tear, right? Like, does it make more sense to buy something like this just trending up? Or do you want to go to NQ and buy it after it's already trended and just consolidating, right? Sure, in here, either of those, all of those worked, but my whole idea. Will you stream into market open? Yeah, we just did. GBP, JPY. JPY. I'm gonna take a look at GBP. Yes, we can remove these drawings now that NQ dropped into the levels we were watching, right? Don't need those anymore. Okay, go to the daily really quick. Yeah, so I'd be more bullish for this day. But really the whole idea would be back to the weekly open. If Wednesday is technically this reversal based off Thursday's closure, you could frame long like you were saying, but more so just back towards the weekly open, because if we look at this weekly candle, it's just a reversal candle, right? So actually for this type of setup, it's better for early next week, get a continuation higher. Let's take a look at Euro JPY really quick. Yeah, Euro JPY, pretty similar. This one technically has a valid setup within my model on the hourly and daily setup. Printing in here. There. It loads. If it's gonna load, it doesn't. There it is. There. Right. So technically, you could have framed longs in here after this reach down into here. You'd expect this low to hold because it's so far away from the EQ. Right, so that's technically a long setup. Sweeps out, back, sweeps again, candle 3 closure. You could have longed that. Right, so there's a few opportunities in there. Let's see, it's the 4 hours, a bit cleaner. 4 hour 15 seemed to be the cleanest in that case. Boom. Get this continuation higher based off 4 hour and 15. Right? And that's an example of, once again, if this would have closed a lot lower, that's when you can just take a positional entry, right? You're expecting this low to hold into this candle. Now it's like it's not, the expansion's kind of done, right? So you just prefer it into the next week if you're still framing those long setups. GBP is stronger, but you can look at SMT for that as well. 4 hour, I would say it has a V-shaped reversal, yeah. I use the expansion model, and at 9:30 open often trips me up. Just let closures occur. Like, you know, we talked through this NQ example here. I'm not trading that. That's not going to give a 1, 2, 3 minute candle isn't going to give me an opportunity to trade that, right? But generally how I want to look to trade is if I'm bullish, for example, this day, and this is the reversal we form, I'm not taking an entry here, right? And putting my stop down here. I'm going to let a continuation form, ideally out of a fair value gap, and trade a continuation like that, because that is going to give me better risk to reward, and it confirms the trend, right? Where there'll be someone taking over Ian's stream, not currently. It was around 9:20. Okay, you already went over that. What about that we spent the whole week looking bearish and we hit a key level? Sure, you can say that on NQ we hit a key level, and I think we did. For me, I'm just not that interested in framing. Nope, I don't want an alert. I'm just not that interested in framing the longs. I kind of want to see these taken out. So sure, we can do that. Then in here, that's where I want to be looking. I'm just not, I just don't really like trading. I don't really like trading Friday after this move, specifically when we just leave this low. Like sure, if we would have had a more bearish close yesterday, opens, lows, takes that, sure, that's better framework for me for Friday. This is kind of, we drop lower and now we're consolidating. It's less interesting to me. Yeah, it makes a lot more sense on YM because YM hits the low, right? So boom, boom, boom. But even then, it's not that deal. Okay, let's go. Need advice. Okay, that. I'm looking for shorts on gold. I already went over those ideas, but I'm not favoring gold shorts below a previous day low currently. Right, that's your target initially for this low, for that short. You prefer to enter a trade early C3, and right now I don't enter any trades that hit 35 minutes into C3 or later. I don't have a specific amount of time, but yeah, that can work. You want to see it early in the candle. In the example you just showed for consolidation, wouldn't you need to look for a closure below the larger body candle before the validation of the close below the smaller closing candles that traded into the fair value gap? EC. What was I talking about? On the hour, I think maybe it was I on the 5-minute or the. We're talking about this down here, and I said the trend was over once this high got taken. Right? Like the bearish trend is over once that gets taken. I don't know exactly what you're referring to. Henry, you'll have to send a photo or reference again. AM needs signal. I just saw that. Can you describe the difference between how you use price action and fair value gap versus IFEG? I don't use IFEG as a point of interest personally, so not much to say on that. Because the way I view it is like my protected swings, all of that. Right, protected swings for me is you reach into a fair value gap here, right, close over. Or sweeping out a low, trade it higher. If you're using an IFEG, you're basically doing this. You're just saying that this old level here forms a protected low. For me, it doesn't, right? Because I'm focused on the recent structure, right? I want to see actual structure to it. I'm not using that old stuff, personally. You said NQ is ripping. Yeah, it's looking all right. Did it give a continuation? Not really. Yeah, not much in there in terms of a continuation, but. And this is once again a thing is like, could you trade this long? Sure, but why wouldn't you just take YM as it's already to that level, right? Like it just makes more sense to trade the stronger asset, personally. That's how I view it. Why is this not a change from bearish to bullish on gold 1 hour time frame? Wednesday the 20th. Gold 1 hour time frame. Day 20. So here's the big thing for gold for me is sure, this can be, whoa, what in the world? This can be a change in state of delivery technically. But also, I'm always going to drive my bias from the daily, right? So like I said, this could be bullish, right? This is the area I was talking about, wanting to see hold. This is bullish. You would want to see another continuation, like an aggressive move here. The lack to get a continuation or aggressive move there doesn't give me a strong bias, right? So essentially, this is also what I talked about. Here is technically a reversal, right? You're looking for a higher time frame continuation here. This is the reversal there. Do you get any clean continuation out of this? No, because it doesn't reach into this fair value gap. Form a continuation, right? So you can use that idea. It's just you need a continuation there. So it's like ideally if this was to form a continuation and it looked like this, sure, you can do that. I personally would have wanted to see something like this, where I have that, and then we go and close over that, right? Not with these consolidation candles, but boom, boom, so more so like that. If I would have, I went one candle back. If it would have looked like this, and then we go and close over that, I think that idea is right, you know? And then we go trade to these highs, maybe even these highs, right? It's just, you'll see like a common theme between all of this is like, I just look for continuations. Am I gonna miss moves? Yeah, sure. Like, for instance, right now on NQ, we go run to these highs. Great. That's ideal, where you would want to see it go if it's going to be bullish. Does that mean that I get a continuation? No, right? And to be fair, I don't really care too much for it, just in terms of how the weekly profile formed. But yeah, Dow ripping. Yeah, see? Why choose the weaker one when the stronger one is ripping? All right, higher at open. Aaron was right. At least on my end. How could I have avoided the bullish CIST on the 5-minute at 9:35 yesterday? I actually went over that already at the beginning of the stream. And this guy AM asking for signals. I'm trading candle to closure on the daily. What has to happen on the H1 first before refining the 5-minute? We can just go take a look. What should we go to? Silver? I think silver had a daily hourly set up to. Okay. I mean, we'll just. That's actually shit looking. Hold up. We're gonna use. We'll just use the hourly structure. What time that is? That's intraday, so I'm not using that one. These are all kind of amazing. We'll just go for this. I'm just trying to get a good explanation. So yeah, I am cherry picking examples. That is what we do when I'm trying to teach. Otherwise, it will be something that doesn't make sense. All right, I don't know why it's not loading. So here. There we technically have a bearish setup. So the first things you need, this isn't a super clean example, but it's just on the chart. We find the high, we need a candle to closure. We have that, right? And it's also a bearish candle. That is good, right? So I want to find the same high on the lower time frame and the series of candles that made it. In this case, it's not super clean, but we have the swing low that made the swing high. If we go to the 30, that will clean it up a little. That's quick. You can see those two up close candles, same level. Anyways, that is the first step. So now it's valid to look for entries within here, right? So within this candle, basically my whole anticipation is I want to see open high, low close, right? So with that, there's a few ways to go about it. You can, if you're really strong biased, right? We sweep out a high like this. I'm just expecting that to be the high day, right? Because I have no reason for it to trade much higher. We're going to turn my computer back on. 1 second, switching the mouse and right back. Right. Because if I'm very strong biased, I should just form a high here and then go lower. Right. And then I'd want to see closure below this level. Right. And that would be ideal. Let's see. Do we the closure below? Oh, we failed to close below. Now we do close below. Now I'm expecting, ideally, this wick has made its high. And I could shorten there, or I can wait for this to occur, and then now I'm looking for continuations into these lows, right? Can't remember what this day even looked like, but, right? Okay, we have a consolidation. This is something where unless I have SMT here, I'm waiting for this, right? And this is going back to the example of when we want to see a continuation, right? And a continuation from a fair value gap here. And I want to see a continuation here. I want to see price go and close below series of up close candles pretty quickly, right? When it fails to close below that, this is now just a consolidation range. For a consolidation range, for me to take a trade, I want to see a sweep of a high. Then I can trade it to this low, previous day's low. Unless we have SMT on that high, we can check. We have a small one. I prefer this one to be the SMT. But nothing super clean. There's a small SMT here, but I prefer it there. But without that, it's kind of hard to trade this, right? So this might be an example of a day where I have the right bias. I don't get a trade unless I'm trading this more positionally, right? But the whole idea is just the logic. Let the daily form its wick high. So once I anticipate this wick high has formed, then I'm just looking for entries lower, right? Now, ideally, once you hit your target, similar to gold today, I'm not trying to short this down here. We've already expanded. It's kind of the same thing. I'm not trying to long the Dow right up here, right at that level I told us about, right? Oh, well, we're somewhere in random. Hold up. I'm not trying to long Dow right here, right? Why? Dow's already expanded. Look at its daily candle. You want to be entering around the opening price or somewhere into that, not after Dow's already made most of its daily range, right? Depending on the volatility. Have I gone over EU, GU? No. Let's, we can do that real quick. Right, we're just going to stay in this one. Euro, USD. Euro is, just bearish, looks like. Euro. BP. I don't know why it's not switching quickly. Anyways, not interested anymore, but let's talk about this really quick. We take out this high. If we're going to get a retracement, we do want to look back into the EQ of this range, similar to NASDAQ today, right? That's the low in there. So it's like if you can short technically to this low, ideally at a swing point. I don't know if we form a new swing point in here. Oh, we do have a little SMT there on the 18th. So the 18th, GBP doesn't take that. But technically, you can short these days following using Euro, and then GBP is the weaker asset. But as for right now, right, we have Monday basically all the way through, and then we hit a level. So this is technically valid for a TGIF back into the range after hitting that important level. Now, with that, depends how you want to look at it, but for me, if I'm going to try to trade that intraday, that's when I'm generally going to focus on the 15, right? So we form the reversal. Do we get a continuation back up? Does it make sense to try to target all these highs up here? No. It's Friday forming the wick of the weekly candle. It's just ideal to look for this, right? If you look, we just have consolidation range, sweep. I'm just looking to the other side of the consolidation range. Right? So there's opportunities to buy this into the end of the day. And the reason for that is if we go to the weekly candle, right? The bearish candle, it hit its objective of previous week low. And so you're just expecting to try to trade the low of the wick back to the close of the wick, or the close of the weekly candle. That's all TGIF is, right? So there's possibility for that. Obviously, that's in hindsight, but that is how you would frame that. Let's really quickly take a look what the hour looked like as well. Right? Hourly, V-shaped reversal. This is an example of a continuation, right? If you look, have a change in the state of delivery, right? Technically, I would still prefer this level of trading a continuation day, but think about this. If this is the level I'm looking to confirm it, it's already taking out my targets, right? So that's where I can be a little bit more lenient within the daily profile. We have a reach into a small little fair value gap here. Closure over. Now I expect this to remain if we're going to trade to these highs. So from there, I can go to the 15, 30, really anywhere, looking for a continuation as long as this low remains. Right, so that's kind of Euro and GBP. Euro obviously just took out those highs and hit. So I think if we go to Euro GBP, it'd be bearish, yeah. So not a ton going on in that realm. Line was primed along. I think people caught that, yeah. Oh no. I don't follow ICT anymore. I haven't since like 2023. So if he's saying in 2025 you're invited to see how it's done correctly, it's probably just gonna be another mentorship on YouTube or something. I don't know. The thing is, I couldn't even make another. I just smacked my. I couldn't even make another mentorship, man. Like, what am I gonna talk about? Like, I only trade one model. At 9:30, what's the reason behind NQ selling off? I walked through that live. So just that. I'll give you that. Give you that. But there isn't a C2 or C3 closure on the daily on GBP, APY. I mean, there isn't on. So here's the thing: is there's not on a candle 3 closure here. There is on Euro JPY. I think did that right. There is, yeah, there is one on Euro JPY. But if you're looking at GBP and Euro right now, GBP is stronger. So if we go to like 6B, right, it's stronger than 6E. Right, you see that? So if you're gonna long a foreign currency paired against the yen, it's better to look for the pound, right? So GBP, JPY. So you'd use Euro to frame the long setup here, right? Which, like I said, I might have been talking about a different asset actually, because I don't recognize this. I think I was on Euro JPY. Yeah, SMT, yeah, there, right? So you can also use that SMT. But hopefully that makes sense. How do you know when to trust higher or lower day? Usually it's a candle closure or a change in state delivery. How do you know what's the strongest asset? Well, like what I just did with Euro and pound there is I'm really just looking at their futures, right? And I'm taking a look, right? Kind of what we're doing today. Well, we just took out the low, right? And then the pound is a bit stronger. It's a lot easier when there's like a candle 2 closure and you can use Euro GBP, right? Because if this is going up, that means that Euro is stronger, pound is weaker. If this is going down, that means that pound is stronger, Euro is weaker. Right now we form this swing, we're trading this lower, that means pound is stronger, Euro is weaker. Yeah, I mean you can do whatever. Honestly, like that's where Forex is a bit nice, is you have a lot of customizability in what you want to trade. But like if the dollar is moving here, I don't really see much interest in like trading exotics. Or we can just take a look and say, okay, USD CAD is probably the best asset to be trading right now, right? So it's like, I don't know, if the dollar is moving, I'm just not really looking at those exotic pairs or minors. Just focusing on the majors. So all I did there was I saw dollar, right? Dollar has this little low. It's coming out of, right around its EQ of its monthly, right in here. Sure, this isn't as clear, so maybe you have a foreign currency that has a more clear daily chart, which is why you can do it, sure. But for me, if I'm bullish dollar, I'm just looking for the most bearish asset here on the daily, which CAD is JPY bearish, right? Yeah, but it's just more of a consolidation. So like if you look at USD JPY versus USD CAD, right? Consolidation USD CAD is trending, right? So it's just pairing currencies. We can look really quick and see. I mean, AUD USD had a move, but that's over, right? But that one you can actually see candle 2 closure here. That's up this next day and this next day. So if this is setting up bearish on NZD futures, right? So New Zealand dollar futures, you want to find a bullish asset, which none. I guess you could use franc. That so like it's just then the dollar is best. So like AUD or NZD, USD, absolute move this week, right? That would be the best currency to trade. Which if you look, it's the cleanest one. You have a candle 2 closure on the monthly, open high, change in the state of delivery, in this fair value gap into the change in the state of delivery, candle 2 closure to look for that low and the monthly low. Uh, 3 a.m. candle session. People are talking about something on indices here. Oh, what a pump, eh? Apparently. Do we get a continuation? Oh, look at the continuation. Right into the fair value gap. Pump. Yeah, likely not catching that unless you're just ripping the news, but that's what I mean with the continuation, right? I'd rather leave the reversal. Once we come back, get the continuation, and that means YM's absolutely cracked out. Probably took the range highs. Yeah. Crazy work. Gold, 3 a.m., 15-minute time frame. So personally, I would say if you're trying to trade the 15-minute, 1 minute in London session on gold, that's probably just not the best idea, personally. It's just, you're just going to get a lot of lack of volume and consolidation, but I guess obviously today just pumps. But for me, I just cannot trade based off just the 15-minute alone, but you're talking about what candle? 3 a.m. 15-minute time frame? 3 a.m. So what about that? 4 a.m. candle will essentially start the start of a consolidation due to the failure to expand below the 245 below. Yeah, this is a consolidation. Once that fails to go below it. And then what do you have? So you have a consolidation low. Trades higher. Right, that's one way you could frame it. Damn, gold. The sad thing is I was looking to swing options on gold this day, but it didn't give me anything to want to because I was looking at this 4 hour. This was my trigger to swing options. Closure over here would lead me to believe that this can be an invalidation and I can trade to this high. And with options, I can limit my downside risk and capture that opportunity. But didn't give that, so might be a missed one, but either way, right? I don't really care too much until we get the closure today. Did you explain how you figured out why I'm much stronger? I mean, it's just looking at the 3 charts together. So if we go back to this morning, you know, we can just look at that daily, honestly. Like, you just take a look at the daily. IM's on. Yes. Right, we just take a look at the daily here. And he made that move down. YM did that. Yes, made that move down. So YM is clearly stronger on the daily. We go to some intraday time frame, the hourly, right? And we take a look. Right? Open high, It doesn't run out this low. It has SMT. So that shows it's stronger. Plus also it's reaching here. And then it just fails to really retrace much, right? A shallow retracement to trade it higher. So that is honestly where I would probably cap the range in terms of the projection on the daily and hourly model and taking out the high. I don't know what's all going on with the news and what Powell said or whoever's talking. Also, Gina, you spammed the same question like 4 times. Please just answer it once. Or ask it once. I will get through each question. It's just then that confuses me. I'm trading mostly 2R. Would it be a mechanical way to move stop loss to break even? For instance, 75% of my TP, automatic break even. I think most people are better off just not touching anything at all. Either hits TP or hits stop loss, but yeah. What is your weekly schedule for live streaming? It's normally Wednesday. I was just doing my due diligence as a citizen in the courtroom all of Wednesday for 16 hours. So. How can we effectively learn the discretionary aspects of forming our models? That just is time and experience. You have to realize I built this model and learned in whatever for multiple years. And then even just refining the model itself took me almost a year. And then all the experience after that. So it's like I learned a lot of nuances with the model or discretionary things where I've seen it happen before. You don't just get to learn that. Like I can't just transfer that from my brain. It's like you have to watch it occur. Like there's certain things I can talk about in streams and like that's the whole goal of the live streams, but that's it. The Euro CHF JPY. Well, we can take a look. CHF. Where's CHF? That's Swiss franc. Yeah. CHF. Well, now we got the news and crap coming in from the dollar. Right, dollar is moving. CHF. JPY. I wouldn't be touching this pair because they're moving in the same direction. So if you look CHF JPY, it's going to be more of a consolidation. Like I'm personally not touching that. If you want to do CHF or a JPY, you want to pair it with something that's opposite. So right, if it's consolidating, you want something that's trending. I've never used this, but like NZD JPY, like that will, I don't even know if that's tradable, but like that has movement. Like if you're gonna pair currencies, you just gotta don't pair two consolidating currencies together. I framed upside bias on Euro. I talked about that was being fine, I'm pretty sure. It's just you want to see a continuation. Euro. Right, like in here. It's fine to favor the upside in here. Because this is where you were looking long. The one thing I notice is we've traded pretty deep into this level, right? So we're almost at these lows. Doesn't really give me much trust to trade away from. You see that there? So if I wanted to, then I also just need another continuation. Which do we get? No, right? That's it. It's just continuations versus trading reversals. It saved me from a lot of losses. Daily hourly 5 is good for forks. Do you suggest a higher time frame TTFM? I would try the 4-hour and 15. Daily 4-hour 15. You would have taken this trade right before news. If it's like right before news, I'm not trying to mess with that. Obviously, we were talking about other things in terms of looking for a continuation, but that's where you'd want to see a continuation occur. It obviously happened while we were on another chart. So, but that's what you want to see out of a continuation. Only that. It's preferred if we don't have as much of a move up and then we get a continuation. But I prefer, so like into there. But nonetheless, once we go and then close over there. Obviously, if you're trying to trade something like this on a news release, you're going to have a tough time trying to catch this on the closure as it's rated 200 points. You're going to have to use either a lower time frame or even like a seconds time frame. But even then, like look at that, like 15 seconds, 160 point candle, 70 point candle. I'm sorry, but I'm not trying to trade that. If that goes the other way and I'm getting slipped 170 NQ points, maybe not slipped that many, but maybe 100. Like I'm losing 100 points per contract on news. So it's like, oh, it's all fine and dandy when it goes your way. When it doesn't go your way, it's just no one ever really looks at the risk if you have to if you're trading your own money. Right? It's one thing if you blow a prop firm, whatever, your risk is capped. But so yeah, I don't think I would have taken that prior to the news event, which I didn't. I'm just a bit annoyed gold didn't form a continuation in here. That's I think I can find the text to day trade and realtor. I just said I was like I want to swing gold options, but a bit annoying. So mainly on gold, I'm just looking for this. Got it. And that can be on a Monday, Tuesday. It doesn't need to be today. I'm just not a big fan of trading news stuff. Not it for me. I was looking at entry at 945 NQ, but you hesitated. I mean, you have to, you guys, it doesn't change. Like if you're going to be trading that prior to some sort of volatile news, it doesn't change the risk associated, whether you enter 15 minutes before or right at it or during. Like personally, I'm not going to enter this on my personal account when I'm like, let's be realistic here. Let's say my order goes through and like, okay, let's 5 seconds, maybe 1 second. We'll do 1 second. That'll be fine in terms of slippage. So maybe it's not that bad. Maybe I only get slipped 30, 40 points. But still, right? I'd rather not. On props, sure. Right? Because if you blow a prop firm, you have your risk is your capital associated with into that account. If you get slipped and screwed over on your personal account, like tough luck, buddy, you just lost your money. Like it's just how it is. So let's see. YM just absolutely on a tear. Yeah. Hopefully, if you got something else from this, you notice that YM is if you want to long something today. What we said. Right? I guess now looking back, my targets were very conservative, but I tend to have more conservative targets. So, but I think I got everyone's questions answered. We're we're at an hour and 20 minutes now. If anyone has any last ones. I thought this, oh, it will only show it on NQ. NQ will show the CISD on the indicator now, early enough, right before it occurs. Pretty neat. How to backtest your strat? Well, lucky for you, I have to make an entire video on that today for YouTube tomorrow. So I will be spending multiple hours doing that. And then you can watch that whole video tomorrow. It will be more helpful than me talking. The Fed says the Fed policy is going to change. When the policy isn't working out, you just change the whole policy. Can't work out if it doesn't exist anymore. We use SMT to frame candle two closures. Yeah. For example, it's like we're looking at the daily chart. This is kind of how I would focus on using it. The higher time frame candles. Right. So previous day lows. Right. Of ES. We're on the hourly. This is not the hour. Is that daily? I tripping? Oh, these are all in queue. I was tripping there for a second. We got SMT here, man. But I would focus on the like important candles. So like previous day low, there's an SMT. Are you in the talks with TradeZilla to get your indicator added? Oh, I talked to them before. But to be fair, I just have a ridiculous amount of stuff going on the next 4-ish weeks, so it's not even on my plate currently. Can we use SMT? Yes. Yes. This live stream will be in WAP. Yes. See you later, AB. Put a small L on NQ before the news. I chose NQ, the weakest asset. Give an entry on M5. 5. Where do you get stopped out though? Like I really understand. Because if you did take entry on the M5, it's like your stop goes here. Or even on the body, you don't get hit. I don't know where you got stopped out there. Oh, you moved it to break even? I mean, I guess that goes back to our question where you asked earlier. Should I move it to break even at a certain point? And I say it's normally better off if you just don't touch it. I've gone through all the content in the market lens. Yeah, I already answered that. But if someone wants to, yeah, I'll answer that. All right, I think that's it for me today. I have a lot to do, so I'm not gonna stay on here and procrastinate. I gotta do a lot of work. So, any final questions before we hop off with this? You look at 3-minute NQ we created closing candles before the big move. Yeah, that's also valid. I would say it's more valid for prop versus personal in terms of news events, trading them through that, something like this. But all right, I'll get this uploaded to WAP. You'll be able to view it. Thanks for being flexible. I didn't know that I was going to be spending all day Wednesday not home, so hopefully it made up for it. Didn't really plan on trading anything today, so I'm a bit too distracted to be trading today. So that is my personal thing. But if you did something cool, hope you learned something anyways. I'll see you guys all later.